Welcome everybody. I'm hoping that the little icon at the bottom of my screen with the participants will start to rocket up now. I'm basically filling in just a couple of minutes of housekeeping until we let the stars of our show start to talk about what they think is interesting and deal with questions and answers. So this is intended to be the first of a series of monthly webinars, and we really want it to be topical. We want to discuss relevant events from the financial and legal world. There are lots of very good webinars for the dental community that talk about things like fallow time. We're not going to be doing that tonight. No matter how hard you make us try, we're not going to be getting involved in the fallow time debate. So this is dictated by the various professional disciplines, and the intention is for us to have 5 minutes, up to 5 minutes from each of the disciplines, followed by questions and answers with regard to that, and then we'll move around the various disciplines. Now, my idea for this was that in the various webinars that have taken place, often there are very good questions that are posed by the audience, but I'm sometimes thinking, I've got something here that is such hot off the press that the dentists who are listening don't know to ask the question. And so that sort of falls a bit flat. So quite deliberately, I've got a situation here where it's going to be the professionals giving you a topical view of what's been happening in their discipline, which they think you will benefit from. Then everybody, there's an opportunity to raise questions and get answers across the multidiscipline. Now, if this turns into a 5-minute monologue of advertising, I will be a firm chairman and turn the switch off. So that's an unnecessary warning to my guests, who thank you to them in advance of giving their valuable time for this. So by way of an explanation of how we're going to conduct this, those of you who are not familiar with Zoom, at the bottom, if you waggle your cursor around, you'll see at the bottom toolbar, there's a little box icon in the middle with Q&A. We're going to use that at any time from now on. You can start doing it now. Click on that box and type in there your question. And I will pick that up as the host later on in the proceedings, ask the relevant professional that question, or it could be something that applies across the disciplines, but that is what I'm going to be using to drive your question. So use the Q&A box. There is also another box that's headed chat. Please feel free to use that. But that really is more for sort of comments, observations, witty remarks that you might want to make about my silly hairdo or whatever. But so it's there for things that aren't necessarily the question. My colleagues, Liam, who you'll see if hopefully your screen's ordered the same as mine. There are we. It's a better way. Liam's giving a wave, and Mike. Also give a wave, please, Mike. They are my senior colleagues at UNW in the dental business unit. They will be picking up things from the chat box if they are things that they can answer quickly for you. But it's better to put stuff in the Q&A. So that's the way that we're going to host this. Now, when you are ready to go, which hopefully will be when we finish this at 8 o'clock, then please, on your way out, there'll be a request to take part in a mini survey. It doesn't take very long at all. This is particularly important for us with this one. And that is that because we want to make this as useful for you as possible. It's a monthly series. Whatever you say can be taken on board to improve it for next month. So please use that. Also, if you have to go for whatever reason, because the missus is saying your tea's going to burn otherwise, then we will be recording this. So we'll happily send or give you a link to the recording of it. So very quickly, I'm not going to go into a lot of detail here because I'm going to let them introduce themselves. But in order of appearance, we're going to start off with John Grant, who's in my bottom left-hand corner there. John Grant, the well-known lawyer from Goodman Grant. You'll see behind him, he's got a guitar. Hopefully he'll give us a tune if things get, well, it won't be boring, John. So John Grant will go first. He'll be followed then by our banker, Malcolm Swan from Lloyds. So welcome, Malcolm. And so the banking slot will be filled by Malcolm. We'll then move on to valuation and sales, Andy Acton from FTA, Frank Taylor Associates. And that will then be followed by, confusingly, by another Andy. We've got Andy McDougall, who is a dental business coach from Spot On, and will be aware of him from BDA webinars. And Andy's going to talk through business coaching, profit improvement, etc. And I think I'm backing here. He's going to be the star of tonight's show, because the one question that our clients keep asking us is about what are other practices doing in terms of their profit performance. Well, Andy's going to help us with that. We've also got others sitting in on this to help us. First of all, from UNW, tax partner Charles Lineker. Charles is a very experienced tax partner. He was also an ex-tax inspector, senior tax inspector. So a double whammy there. And so hopefully, when you ask me the tricky questions about tax, I won't have to busk it and make it up. Not that I would ever do that, of course, but Charles will be there to help. Finally, the very handsome young man in my top left-hand corner with a distinct family resemblance. This is my son, Nigel. He's a dentist. And we thought it would be very useful to have our resident dentist to have a sense of normality here. Now, it's doubly advantageous because one of the things that I've been involved with recently, I was asked to take part in the new Deputy CDO's task group. Jason Wong asked me to take part in the task group, along with all of the great and the good, the BDA, etc., etc. And the task group is going to be reporting soon on will there be a dearth of dental practices on the high street in 12 to 18 months' time. Now, I won't spoil that report. It is, I think, very positive. It's going to be very useful, has some useful support measures. But within that, we identified the most vulnerable category of dental practice owner is dentists like Nigel. Those that are young, who are highly geared in that they have bought practices relatively recently. So what could be better than that? I haven't invited him because he's my son. I've invited him because in terms of the risk group, he is in that group. And so his feedback, I'm hoping will be useful and representative of the dental community. So with no more ado, I'd like to pass on to John Grant for his topical thoughts from the legal world.
Thank you. First of all, thank you, Anna, very much for inviting me to speak this evening. It's much appreciated. My name is John Grant. I am Joint Managing Director of Goodman Grant Solicitors, and all we do there is represent dentists in relation to any legal aspects of running their practice. And I've been doing this for over 30 years now, so actually most of my staff weren't actually born when I started advising dentists, which is depressing but true. Thank you all for joining us this evening. Just been asked to talk very briefly about some of the topical issues which are coming up at the moment. I'll start with talking about furloughing staff. Hopefully now I've got the hang of what it means to furlough staff. But as the scheme is winding down, we're now getting to the other side of that situation, so to speak, where, and we've already had clients contacting us where they're having to look at making redundancies. If it is the case that your practice may be looking to make redundancies, then I would say that, quite frankly, now is the time to do so. And the reason for that is not only because the scheme is working down, is coming down and therefore it's starting to cost you more money, but also if you make staff redundant at the moment, then you can keep them on furlough during their notice period and continue to receive the furlough pay during that period. So if you leave it much later, then clearly staff are, if you're making them redundant, in addition to redundancy payment, they are entitled to receive their notice pay. And if you leave it, then that is something that you may have to pick up yourselves rather than being able to use the furlough scheme. I don't think it will be at all difficult to make a business case for making people redundant at the moment. But notwithstanding that, it is still crucial that a fair procedure is followed. Because even though there may be a good business reason for the redundancy, if a fair procedure is not followed, you could still find yourselves facing a claim for unfair dismissal. So before you launch into making staff redundant, it is really important, in my view, that you seek legal advice and make sure that you are getting the procedure right. That's all I'm going to say about that. One of the most common queries that we're getting at the moment, both from principals and in particular from associates, relates to the NHS contract, and where the CDO stipulated that they would continue paying the monthly contract payments on condition that you continue to pay your staff and your associates. Not so much of an issue with staff, but certainly with associates, we are seeing a number of practices where we're getting complaints from associates that they're not being paid, even though the practice is receiving them. What can they do about it? And similarly, from practice owners, we're getting complaints that they have associates who are not available, associates who are performing badly, and they want to do something about it, but they're concerned that if they do, if they pay them, or if they don't pay them, that they will be getting the they'll be putting the monthly contract payment at risk. To my mind, the guidance from the CDO was very clear in that if you wanted to continue receiving the payment, then you had to pay your staff and pay the associates. What that guidance never did was to address any of these situations. From my perspective, particularly now that practices are open again, I do not see any reason why, if you had an associate that you wanted to terminate, either on notice or if there's been a fundamental breach of contract without notice, why you should not be able to do that, and without jeopardising the contract payment. There's no legal precedent for that at the moment, but certainly it's a hot topic, and we're getting a lot of inquiries from that point of view. The only other thing that I wanted to touch on was in relation to sales and purchases, and I could also see that there's been some questions, or certainly a question that's come in with regard to that. It's always been the case for quite some considerable time that you needed a specialist dental lawyer because of the amount of regulation, because you know somebody who knows the difference between PDS and GDS. Even more so now, particularly with regard to what's happening with the NHS contract, I would advise that whoever you go to, if you're looking to sell or buy, you must use a specialist dental lawyer. The type of warranties and indemnities that are going to be required are even more important in this situation, and if you don't have a specialist lawyer, then they are not going to get it right, and you could be exposing yourself to an unnecessary risk. And that's all I wanted to say.
Okay, well, that's great. Thank you very much, John. And before we sort of open it to the floor of the other experts, if I can just ask a question that's come in from Dr. Sabina Hamid, which I think is relevant to you. Because of the uncertainty of the type of NHS contract, can we ask the vendor to give a buyer an extended indemnity for at least 1 year? I know there's been quite a bit of talk about varying contracts to take into account uncertainties, but what are your thoughts on extended indemnities, John?
My thought is certainly if I was acting for a vendor, I would resist that, because you have no idea of the extent of the indemnity that you're giving. And when you're in a situation where we really don't know what the new kind of contract, the form of the new contract is going to be, then it would be very unwise, in my view, if I was acting for a seller, to give that kind of open-ended warranty where you don't know where the amount of the liability might be. I think if you are looking to buy at the practice at the moment, then clearly there is that risk. On the other hand, it has to be said that they've been talking about new dental contract since 2012 at least. So people have been buying and selling practices in the knowledge that that was a possibility. This has just made it more immediate. But I do think if you're looking to buy a practice, you have to accept that there's going to be a higher risk. And certainly if I was acting for a vendor, I would resist that. So I hope that answers that question.
Andy, do you want to come in? Andy Acton, do you want to come on this? Because it's obviously an issue. I know that in practice sales, that amongst the agent community, there's been a lot of talk, not necessarily about indemnities, but about retentions. Just sort of give us your thoughts on that topical area, Andy.
Yeah, it's still fairly early days. I know we feel like we've been in this situation for a couple of 100 years, but it is still fairly early days. And at the moment, it's that classic one of what's the demand in the market. You've got buyers and sellers. I'll talk more later about where we're at, but the demand at the moment is crushing. the amount of people wanting to buy practices for different reasons that I'll come on to later is off the charts. Therefore, the buyers kind of have to accept that it's the seller that has an awful lot of control at the moment. And so the seller can kind of dictate the terms, and that might not please people who are looking to buy practices, but it's just the commercial reality is there aren't enough practices out there for people who want to buy. And so whilst in an ideal world, yes, there would be some indemnity in there to tie the seller in, the reality is if you want to buy a practice, you may get some deferred consideration depending on the makeup of the income in the practice. But I think locking somebody in is going to be quite hard for the reasons that John highlighted. And you may just need to take a commercial risk that says things might not be perfect, but ultimately you need to answer the question, do I want to buy a practice or not?
Yeah. So if I could just come back very briefly, Alan, I just wanted to distinguish performance of the contract up to the date of completion is one thing. And that's where, you know, because there is an amount of certainty around that, or you know the risk that you're talking about. If I was a buyer, I would certainly want a full indemnity in relation to the performance of the contract up to the date of completion. But really anything after that, which has always been the case, anything after that has got to be the buyer's risk.
Okay, thanks, John. And unless anybody's got any other points, I'd like to pass on to Malcolm. But to start off with, before you go on to your presentation, Malcolm, I know from previous discussions about, specifically Andy mentioned in retentions, that there can be issues with retentions from the lender's point of view, that sort of the clever accountants and lawyers and sales agents that were creating this mechanism to give a buyer protection, but it runs onto the rocks of the way that lenders must structure their loans. Can you sort of give a little bit of an explanation about that for the benefit of the people that are watching?
Yeah, and I'll try and make it brief. At the point at which a bank lends money to buy a practice, basically the person is committing to buy the practice, warts and all, whatever the future performance might be. And I guess going back to what Andy and John have both said, that you know, as a bank, we've lent for the past however many years, and knowing that there may well be changes in things like the dental contract. Retentions do have a place for the right one. I've funded practice purchases where there've been retentions previously, but it's a question of when they become payable and whether that's too far into the period in which the purchase is completed. A bank can only give commitment to lend for a certain period probably afterwards, because you know, after so long the practice performance could change. There'll be things that the bank wants to know about what's happening. And I would rather somebody went into it knowing that, okay, if there's a reason for retention, if it can be sorted out within, say, 3 months or at most 6 months, that's probably something that a bank can agree to fund within that time. Beyond that, probably too long.
And I think that's the key point that I was wanting to draw out here. That there's a lot of discussion about 12-month retentions. We'll see what happens with the buyer operating the practice for the 12 months after acquisition, and then the £100,000 funding will be released. But that with lenders just is not possible, or my understanding is it isn't possible over that period of time. Malcolm, over to you.
Thanks, Alan, and thanks for the invite. And hi, for those who don't know me, I'm one of a team of dental lending specialists for Lloyds. I've been dealing mainly with practice purchases and refinances. I'm not a relationship manager for the bank. I've worked for Lloyds Bank for only 37 years, the last 15 of which have been in this role. For those unfamiliar with Lloyds Bank's dental sector footprint, we've chosen it as a sector in which to specialise for many years. In the part of the bank where I work, we have a national network of specialist relationship managers providing a face-to-face service, although currently it's probably more like phone-to-phone or screen-to-screen. For dental business owners dealing with us directly rather than face-to-face, we've got a centrally based telephony team. All of us are working really hard to keep us up to date as we can with changes affecting the business of dentistry, such as 16.75% NHS clawback, 20% minimum activity measures, AGP, fallow, you name it. We're also aware that potentially there could be changes to the contract, and that's something that I guess we will talk about with individual purchases and see where that helps them sit. I'll ask you to talk briefly about topical things, so I'll try and give a very quick insight into some current hot topics. Firstly, for existing clients, and then for either new ones or for existing clients who are buying practices or looking to do so. To give a little context to this, as a bank, we've been phenomenally busy due to COVID. I speak from personal experience. I've heard Alan liken it to having hundreds of patients turn up on your doorstep at the same time with toothache. Across all sectors, we've agreed many thousands of capital repayment holidays for customers with existing loans, as well as around 250,000 new CBILS loans and bounce back loans, totaling around £9 billion. Our commercial lending book has grown by about 15% in 3 months, which again, in context, historically might have taken 10 years overall. So a little bit busy. It's important to say that we're here to support existing dental clients as well as new ones. I'm told that some of our competitors have changed their lending policies and their approach to lending to new clients. I think it's also important to say that Lloyds Bank's dental sector credit policy is unchanged since lockdown. We've got a strong appetite for lending to the dental sector. As a bank, we recognise that some practices have been affected more than others, but dentistry is a needs-based profession in which we've got confidence. So firstly, existing clients, their relationship managers got the focus of helping and supporting them through the current challenges, if they have any, most have, as well as our normal lending products such as term loans and asset finance and overdraft facilities. I mentioned we've got these CBILS loans and bounce back loans, which the British Business Bank have said are currently available until September. Bear in mind it's September. No doubt Rishi will review between then and now, but currently the end date is September. Particularly topical is that the majority of the 6-month capital repayment holidays, which were agreed early in lockdown, are coming to an end. So our relationship manager has been given the task of proactively contacting clients as the end of the capital repayment holiday approaches to see whether moving back to normal repayments is appropriate, and if not, to discuss other options. Something that might interest you is that Lloyds Bank joined the government initiative called Term Funding. That was launched shortly after lockdown, and which effectively made it cheaper for banks to access money. This cost reduction is being reflected in the interest margins for new borrowing. That brings me to the second topic of practice purchases, which is my day job. I deal with many associates, principals, dental groups, mainly new to Lloyds Bank, who were either in the middle of buying practices when lockdown happened or have subsequently agreed to buy them. With the help of specialist credit managers, some people call them underwriters, who review all the bank's lending, looking at how best to help each client get to completion depending on the specifics of the purchase. Again, going back to what works for one might not necessarily work for another. Typically there are delays, but the vast majority are progressing. Very few buyers have withdrawn, in my experience. There are various factors which will affect the speed of completion, business mix being a main one, NHS, plan, fee per item. The financial position of the buyer is a key one. The timescale requirements for buyer and seller. Again, there are different levers on that one. Some want to complete or sell more quickly. The speed of recovery of the practice following reopening is particularly important. And the approach of the principal or the buyer to things like AGP, work, fallow time, whether you've got spare chair time or spare surgeries, will all make each individual one different, I guess. So we're working with purchasers and their professional advisors, accountants, solicitors, sales agents, valuers, business advisors, did I get you all? To reach a sensible way forward that works for the buyer and the seller. It's got to work for both. I appreciate there are different demands from each. There are various approaches. We've mentioned deferred consideration, retentions, delaying completions until they're ready. There are earn-outs. There may be other approaches. We're open to see what works for each. I've seen some mainly NHS practice purchases at a point where they can now proceed, subject just to a retention related to the 16.75% consumables clawback. But at the other end of the scale, I've also seen practices where there'll be a much longer road to recovery and sale. Each one's different, as I've said. I'm spending a lot of time, and I know others are, discussing ways around some new obstacles to reach completion. Speaking of which, and I can see there's a question about it, when lending, a bank will usually ask for a professional valuation. Valuations currently carry a paragraph about material valuation uncertainty due to COVID and the need to regularly review values. This has an impact on being able to rely on the values PI cover by both the bank and the client. Alan has got an RICS valuer on his panel in a future webinar, so I don't really want to steal their thunder, but in some cases it might make sense to enable a bank to lend and for the purchaser to be comfortable to ask for a valuer to update his opinion of the value prior to exchange of contracts in the approach to completion. This will be based on giving the valuer an update on the performance of the practice, especially where there's been a long time lag from when the practice was originally valued and where the business performance or the market might have changed materially in the meantime, up or down. This might have a cost attached to it depending on timescales and the values approach. It could result in a different higher or lower value and further discussion. Again, each one will be different. In other cases, the purchaser and the bank might be able to get comfortable based on management information from the vendor. Ideally, a breakdown of income and costs that we can compare to the pre-COVID performance of the practice, as it's that, usually the purchase price is based on pre-COVID performance. Each transaction will have different dynamics, but we'll work with both as their journey unfolds. Okay, so just as my 5 minutes probably up, to summarise, very quick run through, we're focused on helping and supporting existing and new dental clients while taking a realistic account of the specific circumstances of the practice and the buyer, and we'll still look at each case on its merits.
Okay. Thanks very much, Malcolm. I just wonder whether Andy Acton might want to sort of come in to follow up on the bank valuation side of things with the valuation side of your business. Any comments on that?
Yeah, I mean, the approach that we've taken is, whilst it's exceptional, I see it as it being a blip in the market. And so what we've done is we've effectively valued as if COVID didn't happen. And the reason that we're doing that is if you don't take that as your start point, what is your start point? The start point could be anything you want. So the thing that's static and the thing that was known was before the middle of March, the world looked like a certain thing, and it had looked like that for an awful long while. So we've taken the view and said, well, if we take COVID out of the equation, there's still patients, there's still dental practices. There's 3 issues that need to be addressed by practice owners, which is the speed at which they're allowed to work and can work, what they can physically do in the practices, and the time they've got available to deliver the treatments. But I'm seeing this as being a 3 to 6 month issue before things, and therefore heavily discount the value of a practice for what is going to be a relatively short-term issue. If the practice owner doesn't address those themselves at some reasonable to affect the value based on that, I believe enable that recovery to take place. And if it does take place, then it's not unreasonable that buyer is going to take on a practice that was in the condition it was in January, February, March of this year. So anybody looking to buy a practice now on the basis that the private income might be, say, £2,000 or £3,000 a month, and pre-COVID it was £10,000 a month, that feels a bit opportunistic. So my view is that we're looking to value pre-COVID, but there's a big responsibility on the vendor to make sure that they do pull their finger out and make sure that those numbers come back. At the moment, there are constraints around how they're able to work, but I see that situation easing over the next few months.
Okay, thanks, Andy. Before we come on to you, there's something that I know you well enough to do this, Malcolm, but I'm going to push you on it, because you mentioned about the capital repayment holidays and the sort of things that our client will say to us. Clients will say to us is, so is this just going to be an automatic, our experience was the first time round on capital repayment holidays, it was virtually automatic. I don't know anybody that was turned down. Is it going to be more of the same, or yeah, well, I'll stop at that. Is it going to be more of the same?
Again, I'm not dodging the question. Each one will be different. Some will be happy to go back to repaying, some won't. The bank has made it clear that another, say, 3-month extension is very easily agreed, but that might not be the right answer for everybody. It may be that somebody needs longer, or that they need to review again in 3 months' time. So, short answer: 3 months, probably an easy question, an easy ask, but it might not be the right solution for everybody.
Okay, no, that's very helpful. Thanks. Actually, I don't know whether you have a volume control, Malcolm, but there's one of the listeners is saying that your volume is quite low. I don't know if you can turn it up, that would be helpful. But this particular aspect of capital repayment is something that I think is going to be very important. It was another point in this task group that I mentioned, and it links back into the at-risk group of practitioners, because personally I think that the biggest danger for practice owners are those who are highly geared, who can trade profitably, but and as things recover during the COVID crisis, actually this is I'll leave this for Andy McDougall to help more with this. but it could get to a point that they're trading profitably, but not profitably enough to service the debt capital repayments. And I see this as being a really big issue that for the future that people need to concentrate on. And it's one of the requests to government through the task group to consider giving assistance. Because it would be a tragedy, in my view, for practices that are profitable but just can't make enough profit to pay the 40% tax, to pay the £30,000 a year loan capital repayments, that they should come under threat of closure as a consequence of that process. So that's why I picked up on this. I think it's a really important point in debt capital servicing. Okay, so over to you, Andy Acton, for your presentation.
Lovely, thank you, Andy.
Andy, we're having problems with you are freezing in and out on your.
I'm one of the. I'm still here.
Yeah, you're still, but you're freezing in and out. You've give it another go, Andy.
Is that any better? Nothing's changed at my end. Everything's as it was.
Right, give it a go, but it's cutting in and out.
I'll give it a whirl. So my name's Andy Acton, one of the directors and shareholders from Frank Taylor Associates. We value and sell dental practices. Company started back in the 1980s and continue to do what we do until today. I've overseen my involvement in Frank Taylor Associates, from small practices to very large ones. In my few minutes, I want to try and run through a 15-year history, which will be important as I explain to you. Let's roll back to 2005. Dental practices with living items of service. Everything was rolling as it was. Associates and principals could broadly earn what they wanted to, and the associates were only 50%. In 2006, what was called the new NHS contract came in, and the impact that had for associates was that the profitability of a dental practice, for primarily NHS practices, became capped. So associates felt incredibly vulnerable because, as a principal, if you wanted to improve your profitability, what you could do is reduce your reliance on associates. That produced an incredible spike in the number of associates wanting to buy dental practice because they felt exposed and vulnerable. And that was back in 2006. Then on to the end of 2008, Lehman Brothers went bust in 2008. That sparked another serious interest from associates wanting to buy dental practices. And the reason being is they felt vulnerable. They felt vulnerable because as self-employed individuals, principals again had this hold and this control in terms of whether they needed, and to the extent they needed. Then around about 2010, 2012, things started to settle down. And the relationship between those who were happy to work in dental practice and principals stabilized for a good period of time. Through that period, values increased. We then rolled forward to early 2020 when COVID hit, and it was another spike again. And the issue for associates at this time was that they were left out in the cold in terms of support from the government, because as an associate earning more than £50,000 a year, there was no help and support. It gets worse, unfortunately, because as practices reopen, there's two things happening. Associate pay rates are being reduced. So the days of 50% have long since gone for many associates anyway, but I'm hearing cases of associates being paid 25% now, which isn't great news at all if you're an associate. So you also end up in a situation where you have no asset to return to. So when boards are taking them back into their practice, but in the early days, there weren't that many patients to see, and they were still trying to work out how to do AGPs and manage fallow time. And I know that was a banned word, Alan, but I've got it in, just to try and get back into practice. We saw an increase there. That's also been linked to is an increase in number of people who own practices, kind of just saying, I'm done. I've been through so many, we've had CQC come in, we've had a recession. There's so many changes that have gone on in the past few years. Practice owners are now like, well, this is just a straw that's broken the camel's back and I'd like to sell. So from my point of view, I've got nearly 5,300 people wanting to buy dental practice. That's gone up 6% in the last couple of months. In the last few weeks, we've launched 30 practices to the market for sale. So there's a good supply on that side of things. In the last couple we've accepted offers in the region of about lots of the chatter about, you know, values are declining, no one's buying practices, you'd be crazy to buy a practice, isn't matched by my own experience. That's not what's happening. Last week alone, we had 8 offers put under practice, under offer, and we got 8 new instructions to sell dental practices. But as I said before, there is a responsibility on the part of the practice owner to make sure that they are bringing their practice back as best as they can to pre-COVID levels, because that's where you're going to get your best value. It's not reasonable to reopen your doors, but not do anything to bring your practice back to its former glory and a good value. The people who are getting a good value are those that are reinvesting in their practice and getting into good shape so that it's attractive to buyers. But the hard reality for buyers at the moment is we're looking at about 20 to 30 buyers on average per practice that comes to the market. And that's because buyers' associates feel vulnerable because they haven't been paid by anybody for a few months and there's no asset for them to return to. And don't get me wrong, owning a business is not easy, but you do have to return to. And matched with that, we've got contracts, and that's still seen as being a gilt-edged income stream. Buyers are still very keen to acquire those, and as Malcolm said, the banks are still to fund those practices. So that's kind of an overview in terms of where we're at in the market at the moment. But there's still a lot to happen and a lot to change. What I'm really encouraged by is both buyers and sellers are back in the market, because I think that's just good for the profession generally, that people are still seeing that there's value in dental practices.
Okay, that's great. Thanks very much, Andy. Anybody got anything specific to pick up with Andy Acton before we move on to Andy McDougall? There are some questions, Andy, that relate to your area, but I think that they are sort of multidiscipline answers. So I'll leave them till the end, and then we can all chip in on that,
sure,
if that's okay.
Yeah, no problem.
Mr. McDougall, come on then. Tell us about how things are moving in the profit recovery world.
Yeah, we'll tell you a little bit about spot on business planning. We've been in the dental industry about 12 years. Before that, my life was very corporate, very large corporate. And about 12 years ago, we brought some of those techniques that you'd find in those industries to the dental industry. I suppose many people would associate us with numbers, which is quite right. We do an awful lot of very granular level financial modelling. But in actual fact, a lot of what we do, 50% of what we do, I would say, has got nothing to do with numbers and everything to do with things that have an impact on the numbers. So your brand, your leadership, your marketing, your culture. Have you got a good practice manager? Have you got people on the bus that you wish weren't on the bus? And have you got people that you'd like on the bus that are not there, and you need some help in finding those people and growing them? Our claim to fame is that we would double a client's profit within a maximum of 3 years. It's a tall order, I know. I know there's one gentleman here who would probably verify that, Mr. Suggett, because he's got about half our clients, and obviously could be able to verify that that's okay. The other thing that you might want to think about is having a look on our website, where you'll see about 40 video testimonials from fellow dentists who give you the confidence to know that that's what we do. But I think the important thing is that they say that with clients that have been with us 8 years, 9 years, 10 years, and clearly if what we do doesn't work, they wouldn't be around more than a year. So hopefully that gives you some confidence in what we're saying actually works. If we go back to last part of March, we didn't realise we were going on a journey with our clients. It's gone through various stages, from what happened in lockdown, and then cash flows, loan applications, business interruption, etc. And on business interruption, we're starting to get a number of emails from our clients saying that interim payments are already being agreed, which is starting to look good. Not from every insurance company, but certainly from a couple. And I think one of the things that I heard on lots of sort of chat shows before was the importance of cash flow, but the difficulty. And I think we've managed to get that to quite an art. But I think one thing that people should realise is that one of the important things that we're doing with our clients at the minute, cash flow is not a one-off exercise to see if you need some money in 6 months' time. We do rolling cash flows, which basically means every month we compare the actual cash flow that's happened with the cash flow that we'd predicted, okay, i.e. the forecast. And the idea is that you've got tiny variances. I mean, I remember many years ago, as a young man, going in with a cash flow forecast with some hefty variances on it to see my boss, who basically said, you can't tell me what's happening in the next month, but you want me to believe what's happening 6 months down the line. So it gives the client a degree of comfort that tiny variances mean you've got accurate cash flow forecasting, and therefore as new factors become aware, you're reflecting those changes into the rolling cash flow, so that you've always got accurate visibility of what's going on. And in fact, your cash flow in 3 months' time might not actually look like the cash flow that you thought that was going to be, because of situations that are beyond your control that come to light. In terms of our clients, they're all back, every single one of them. Quite a few of them, I would think 30%, have reported bumper profit months. And I think that's quite interesting, because in April, when we did the cash flows, a lot of people had legacy bills. So particularly fee per item clients saw their cash flow go off the edge of a cliff, where there was no regular recurring income coming in, but they still had some legacy bills that needed to be paid in April for March. And many made a pretty poor April. And of course, that's reversed out as they go back. There's lots of work to do. Many are reporting lots and lots of new patients. And that's quite interesting, because throughout the country, we're hearing from clients that there are still lots of practices that have not reopened. And as a result, they're picking up lots of patients from those closed practices. One of the classics I heard the other day was they'd never done as much cosmetic work in their life, and they thanked Zoom enormously, because most people have been looking at themselves over the lockdown and thinking, I'm going to do something about that. So they've had plenty of cosmetic work going their way. In terms of August, it's a mixed bag, with some people still saying they've got pretty full diaries and are just as busy as ever with lots and lots of new patients. Other people more cautious about the holiday season and what impact that is going to have. The other thing that most people are doing is, as they're learning, as dentists are learning about how they operate, they're starting to constantly refine their operating processes or their operating procedures. And of course, coming to us all the time to ask what is going to be the impact on the numbers as they change their standard method of operation. Classic questions we're constantly getting is, what should I pay my hygienist? What should I pay my associate? Can I afford to bring the whole team back from furlough? In fact, can I afford the team long term? Other big pieces of work, should I be changing my pricing to reflect the cost of PPE, or should I be giving a surcharge? And that's come with a mixed bag of reaction from various customer groups. People also worrying about the fact that just because you've reopened and it's been a bumper month for many, they're very conscious of the fact that potentially once the furlough disappears and the schools are back and people, potentially, is that going to be the peak of the redundancy season? And does that mean there's less disposable income? And is that going to have an impact? So again, watching your cash flow all the time. And one of the classics is, through all this, clients really wanting to know their profitability of treatments and the profitability of clinicians and how that's changing all the time. So the relationship we have with our clients is not an annual thing, it's not a monthly thing, it's a constant thing with lots of Zooms, emails, etc., where as they have problems, we're trying to help them find a way through those problems. Interestingly, we had a major upsurge of new business, largely as a result of some webinars that we did. And the interesting thing that came from that was, although we say to people that we will double your net profit over 3 years, the interesting thing is that many said, well, that's great if you can do it, but this has been such a big wake-up call. What I actually want to do now is run my business a very different way going forward. I want to be able to plan and control my business in a way that, people, I think, running it in a way that was probably less than professional. And it's interesting how the people that have gone into this who already had financial control of the business have hardly suffered. And the people, I think, who've been running the bank statement by the end of the month, looking at the bank statement to say, can I afford to pay myself, have probably been less well placed to feel comfortable through this process. And again, picking up on something that I think Andy said, we did a webinar, I think it was 2 weeks ago, contrasting the life of the principal versus the associate. It's quite interesting. I had a call with a principal, I think it was on the Thursday of the same week of the call on the Friday. The principal said to me, I've had enough, just get my business valuation back to where it was, and I just want out. I've had it, I want out. And the very next day I got an associate said, I've not got a very good future, I'm going to buy a practice. And I thought, it's two sides of the same coin really, isn't it? Very interesting. So in a nutshell, we've had lots of methodology that's been rolled out to our clients with the cash flow, helping them make those decisions as things have unfolded. And indeed lots of one-off questions where we've got situations that are quite specific to specific practices. Lots of people asking us, you know, how do you think this will affect my valuation? And to be honest, that, you know, that's not my forte. But what they're all asking for is help to get them back to the previous levels. So get my profits back to where they, you know, where they were before. And obviously you know, the techniques that we would normally use will be the same techniques that will help them to do that. So lots going on.
Okay, that's great. Thanks, Andy. I've got a question for you here that you'd probably need longer than I'm going to allow you to answer it. What is the best way to calculate a cash flow forecast?
Well, what I suggest is that person gets my email address, and I'll give them an hour to show them what a proper cash flow looks like.
Okay, thanks, Andy. Okay, so it's the accountant's turn now. I don't want to take up very long, and there are a couple of specifics. First of all, I always like to think that whenever I'm involved with a presentation, there's something that everybody can take away, no matter how simple, that is of advantage. Something was announced on the 30th of July, which I don't think has received much publicity. It's a government 20 million in new grants to boost recovery of small businesses. Here it is. Here's the printout of it here. Now, I think Mike was going to post something in the chat box with a link through to that. And it's being distributed. Well, first of all, it's in relation to things like websites. And here's an interesting one, also specialist advice. So actually, we need to check later with you, Andy, as to whether you will qualify for that, because you're giving specialist advice. So are we from time to time. But it also covers this. Nigel and I were talking about this earlier on. That well, actually, do you want to explain, Nigel, about your website? You were talking about
that. Yeah, just so we're midway through redeveloping our website, and hopefully the grants will be able to use useful for that.
Yeah, so that was just a specific example that websites and technology are going to be covered by this grant. Now, it's being distributed through the mechanism of European grant funding, and usually that excludes dentists. So there are a number of different enterprise agencies up and down the land that coordinate this, and it is possible that it's a postcode lottery. From the ones that we've checked in the Northeast, it seems as if dentists will be eligible. So there's a little sort of unexpected freebie that you might be able to take advantage of. There's also a tax point which my colleague Liam is going to sort of help out with that, and this is an unexpected change as a consequence of the change in entrepreneurs relief rules. So Liam, would you like to sort of give a little summary of that?
Yeah, thanks, Alan. Just a quick one from me. So on the 11th of March, the Chancellor effectively changed the thresholds for capital gains tax. So previously you could make gains of up to £10 million before the higher rate of capital gains tax was payable. That limit has now been reduced to £1 million. So that's quite a big change. More bad news in the sense that previous disposals that people have made might count towards that £1 million. Any disposals that anyone's made since the entrepreneurs relief rules came in 2008. So some people, it's not just the Chancellor mentioned just on the 11th of March and disposals from that date count. You have to go back to 2008, count up any disposals you've had, and have you got anything left in the £1 million rate. Principals with limited companies need to be particularly careful, especially if they incorporated a sole trader business previously, because it's possible that they've already used up some of the £1 million threshold when they effectively sold personal goodwill into a limited company. So overall, I guess the key message is here, if you're thinking about selling your practice, ask your accountant for a tax estimate upfront, so that there's no sort of hidden taxes that you weren't expecting. Everyone's circumstances might be different. So just because your mate down the pub says it's 10% capital gains, it might not be for you. And finally, there's more bad news, that speculation in certain circles that capital gains tax rates will increase further in the future as the Chancellor tries to claw back some of the furlough monies.
Okay, Charles, if it'd be useful, I know you've got some very interesting thoughts as to what, you've got a good tax crystal ball in relation to capital gains tax. Would you like to sort of give our viewers the benefit of your thoughts?
Well, I don't know about a crystal ball, Alan, but excuse me, just a couple of thoughts. Just picking up on what Liam says about capital gains tax rates, I think it's probably fair to say that capital gains tax in political terms is a soft target for any Chancellor, because let's face it, the great majority of people, even taxpayers, don't pay capital gains tax. If he did look to raise the rate as soon as perhaps in the next budget, an obvious thing to do would be to take the top rate of 20% up to 28%, which is where it already is for sales of residential properties. And the other thing I'd just like to flag up, which came in the current year, is if you sell currently a residential property, which is not your principal private residence, if you sell it from now on, rather than paying the capital gains tax on the 31st of January following the tax year in which you sell it, you are now required to make a return to HMRC and pay the capital gains tax on that sale within 30 days. Now, at present, that only applies to residential property, but I think it's only a matter of time before that gets extended to sales of commercial property and also indeed sales of practices. So you could find that when you're entering into a sale, at the moment, you've still got the gap. If you've sold a practice this month in August, it's the sale that falls in the tax year to 5th April 2021. Therefore, your capital gains tax is not payable until 31st of January 2022. But if they do change the payment regime, you could be looking at paying it literally within 30 days of the sale. So you very quickly are having to pay over the tax to HMRC. So that's just a couple of thoughts.
Okay, that's great. Thanks very much, Charles. Now, as ever with these things, we are starting to run out of time. So what I'd like to do now is have a sort of a quick fire through the questions that have accumulated. And with this, it's I can't force you to give yes or no's to this, but let's be as brief as possible. The first one is there are rumours of, this is from an anonymous attendee, rumours of purely NHS practice valuations going up after COVID due to their stability. If the multiples of EBITDA are already at 7 times, would we expect this to gradually go up to 12 times like big healthcare firms? So the logical person to give the chip in first is Andy. What's your reaction to that?
Everybody loves a rumour, don't they? the bottom line is, I think at somewhere around 7, 8, 9 times, that for me starts to push the boundaries of the cash that's available in the business to pay the owner, pay the costs, pay the bank loan and provide a return. I think unfortunately the deal that Bupa did with Oasis has kind of given people in many cases false hope that there are incredible multiples coming. Personally, I don't see that happening. I think values are at a high level. I think people are getting a good return for the business they're running well. I would be very surprised if we saw a multiple of 12 coming in for mainstream NHS practices.
That's great. Thanks, Andy. The next one, it's common knowledge that the contract value, NHS contract value will not change. The contract will change its shape and form. Is that true? Well, I'll pick that one up because I think the answer to that is who knows. We certainly don't, but I think the information that has come out is that if you have a £500,000 contract, you'll have the ability to retain a £500,000 contract. But if it's something like along the prototype line, you'll have to have a different mechanism of earning the 500,000. Is that, Nigel, have you got any thoughts about that, or are you just in the same boat as the rest of us?
Unmute.
Yes, yeah, same as you, really.
Yeah, so we don't really know the answer to that one. Here's a good one for Malcolm. Base rate is 0.1%. When do you see it rising again?
Yeah, who knows? Great answer, Alan. Yeah, following your lead. I mean, there's people saying it'll go up, people saying it will go, could even go further down or negative. We've got a man who talks about that for about half an hour. I won't do that.
Yeah, and being somebody of the age when I remember, did it go up to something like 16% overnight? And I thought, I wonder what's going to happen to my mortgage in those days. But yeah, so next one from another anonymous attendee. Is there any interest in sales of specialist practices? That's probably another one for you, Andy. What's happening on that side?
Yeah, there is. There's strong interest, particularly for orthodontic practices. I don't know the nature of the specialty, but not that many specialist practices come to the market, and we've always got people looking for them. So I think if you've got a specialist practice, they're almost insulated from recession and COVID because they come to the market fairly rarely. So when they do, there tends to be quite strong interest for them.
Yeah. Okay. That's reminding me of another question that was put to me by a client the other day. That in relation to ortho contracts that are on a time-limited basis, that we haven't seen many of them being sold because they're relatively new under the tender process. But the question was being asked that this is one really for Malcolm, I suppose. What will the attitude of lenders be if you've got, whatever it might be, 5 plus 2 years left, or whatever 5 plus 3 years left on a contract? Will your lending term be restricted to 7 or 8 years? Is that what's the score there, Malcolm?
Yes, it will. There are some practices, ortho practices particularly, where they've only got certainty through till March 2022 because of the hiatus with contract tendering or not, and they're probably unfundable because they can't pay back in that time. But ortho practices are very profitable, and I've agreed to do one that has 6 years left on its contract. So yeah.
Okay, that's interesting. Thank you. Here's another one, another anonymous one. Is it a good time to put a practice on the market early next year, April, or wait for a year or two before putting it on the market? I think like the questioner said, this is a private specialist referral practice. As was, to be fair, we should answer that question, but I'm interested in thoughts as to, never mind, just on a general basis, should practices, is it a good time to sell now, or should people wait?
I think you need to probably look at your own circumstances. Some people don't have the luxury of waiting depending on their situation. My own view is I'm expecting to see most practices get back to a point within 3 to 6 months where if you look at their 2 months income and you multiply that by 6, that should give you a strong indicator of what their annualized income looks like. So in the next 3 to 4 months, with good planning, triaging patients well, and working within the confines of keeping everybody safe, if you can get back to something that looks like 70–80% of pre-COVID levels, I think you're in a great position to put your practice to the market and get a good value that would have looked like something it would have been earlier on this year.
Okay, great. Here's a tricky one for you, John, the lawyer, from Jyoti Sunerji. Is it legal for the NHS to ask for a breakdown of number of AGPs we did for private and NHS procedures?
Generally speaking, under the contract, you have to provide the NHS with the information which they request. I don't think that they are entitled to ask for any information in relation to any private activity.
Okay, I'm jumping a couple here because they are very specific, but here's a good one. Is the associate model dead? Who would like to pick that one up? Well, maybe I can sort of chip in on that then, because I think that there are sort of competing factors going here that in a situation of depressed profits and perhaps sort of lower throughput of patients, it's tempting for the practice owner to take on more of that work themselves, because in a situation where you're, as a practice owner, you're fighting to have keep your head above water, particularly in a mixed practice, let's say, or the higher proportion of private fees, then you know, there's an advantage, financial advantage for the principal to do the work themselves. That's putting pressure on associates, and we've talked before about the fact that the self-employed grant wasn't available to a lot of associates. There's also another curveball coming in, which isn't talked about a lot, but if you remember at the time that Rishi Sunak was talking about the self-employed grant, he made a veiled threat in relation to self-employed people, and you know, the sort of the difficulty in interpreting what some people do as being self-employed as opposed to being employed, and with this sort of veiled threat of, you know, you can have the grant, but we're coming to get you. So, you know, what if that applies to dental associates? There's already been this review where the end result of it has been delayed because of COVID. So I think there could be a sort of a combination of circumstances that are squeezing associates. However, having said all of that, if things return, or when things return to a form of normality, it's not so long ago where, you know, again, I'll throw this to Nigel, what has the situation been in the Northeast for practices being short of associates and the difficulty of getting them?
Yeah, well, we've just recruited, and in the past we've had huge problems recruiting, but for a job that we advertised, we had a really good response to and had quite a few viable candidates, which for previous jobs that I've advertised for has never happened before. So yeah, there seems to be more about.
So I think the situation currently is sort of quite, I suppose, depressing for lots of associates, which is why Andy has had lots of associates expressing an interest in buying practices. But the concern is that it's the counter argument to everything else, that when things return to normality, surely the life for associates will return to normality, unless there's this sort of tax issue hanging over where they're regarded as being categorized as employed, when you know, the situation will change anyway. Okay, so then would the banks be less favorable or want more security for purchasers who want to buy it as a limited company for an NHS practice? Oh goodness me, this is a complicated one. Would the banks be less favorable or want more security when you're buying as a limited company for an NHS practice that's already a sole trader? Right. Well, I think with that one, and this is a speciality of Lloyds, because I will say this because not just because Malcolm's here, I would say Lloyds are the only lender that really understand the technicalities of limited companies and NHS contracts and the concept of a flawed incorporation. So I'll answer this for Malcolm. Don't go to Lloyds if you want that situation funding. In fact, I would say don't touch it with a bloody barge pole. What are you doing? But because it is teetering on the precipice of you losing a lot of money. However, there are some lenders who will consider that type of situation. Not so much about security. I'll be blunt here. It's about ignorance of the technicalities, or perhaps let's be fair here, because we do have good friends amongst all of the lenders. It could be a significant deposit, other family security, etc., that it's not a risk for the lender, it's a risk for the buyer. But you're touching on something there that is potentially very dangerous with limited companies and NHS contracts in the name of sole traders, unless it's something called a subcontract, but that's a different beast. Okay, so I think we are past the witching hour. So it's time for us to go. There were a couple of specific questions there. What we will do, because one about capital gains tax that was quite complicated on timings, and another one to do with leasing. If you email us because I think you're anonymous, email us the specifics. I'll make sure that you get an answer. So that is us. We've come down our home straight now. I'd like to say thank you very much to all of the virtual attendees. We hit over 100 at one point there. Thank you very much indeed to all of the expert professionals who've been kind enough to give their time and wisdom. Thank you to my colleagues. Thank you to Nigel. And hopefully this has been a worthwhile exercise. You've enjoyed it. If I'd like for us to keep this going for your benefit. So hopefully we'll see you next month. And with that, thank you and bye-bye everybody.